What is up? Okay, this might be the last video of the boot camp, unless I come up with something else. I don't really know. But we are going to go over how to find your bias, okay? We're going to align everything that we have learned. So let's take, for example, it is currently today, Tuesday, and we want to find our bias for Wednesday. Great. So, how to find your bias? I like to start on the daily time frame. We don't really need the weekly time frame because we are day traders. We trade on the 5 and the 1, and the weekly is more for swing traders, okay? Now, going on to daily, what I love to do is mark out the previous day and previous day highs and lows. Why? Because these are key levels that like to be tapped, and we are also in a bearish trend. So you already kind of have a sort of bias that at some point we are most likely going to head for these highs. Okay. Second, you want to mark out any daily fair value gaps that are close that market could possibly look to retrace back into or manipulate into. So we have one right here. That's the closest. You don't really need this one because we have this one already. Unlikely that we are going to fill both of these because we're on the daily time frame. Next, I like to go down on the 4-hour. On the 4-hour, I like to mark out any buy side liquidity or sell side liquidity that has not been marked yet. So right here, we have one right here, as well as here. Great. Now, once you have your lows and highs marked out, these are the most relevant. These are either the highs of the highs or lows of lows because we are on the 4-hour and we trade on the 5 and the 1. So these are where liquidity sweeps that can happen. We can see a reaction on these levels. Okay, this is why we mark them out on the 4-hour. The 1-hour is to find any possible fair value gaps that can be respected into. Okay, this could be this right here, or not this right here. What am I even saying? Like for this example, you could have used this day, this fair value gap. You could have took off the inverse of this 1-hour and your bias would have flipped bullish. Or you could have used this fair value gap right here to be bullish for this day. So always mark out your 1-hour fair value gaps. There is none on here, so we move down to the 15-minute. On the 15-minute, now you want to mark out the highs and the lows again. And these 15 minutes are what you should really be paying attention to if they are not taken, because these are more closer to the time frame that you're on, which is the 1 minute. Because if you're looking at a 1-hour high on a 1 minute time frame, you are never going to find your setup if you are within a range and it's far away. If you're close, perfect, use the 1-hour. But then again, at that time, it would line up with the 15-minute close highs and lows. So you want to mark out your 15 minutes and things like that. Now, to find your bias at the current time, you want to see what price is reacting to, what maker model are we in, and we also want to look at key levels like the midnight open to see if we're super high or super low. So obviously this is a new day, so we don't have anything right now, but as you can see, we can assume that we are now in a market maker buy model. So the day for tomorrow could be bullish depending on how we react to this 15-minute BPR. Okay, it also depends on what price action does here. Let's say price action does a liquidity sweep and then we have a change in state delivery. We react to a fair value gap. Our bias is going to be bullish. Okay, so this is pretty much how you would find your bias. Once it's near 9:30, you can scroll down even further, and let's say 9:30 looks like this, and we are in a market maker sell model. You would be bearish, right? Because we should be respecting bearish for value gaps unless we get a change in state of delivery or something otherwise. So Your bias would be the next drawn liquidity, which would be either at this low or at this low here, and you would look for sells to sell downwards. Okay, that would be how you find your bias. You want to go on the higher time frame and then scale down lower to the 4 hour, 1 hour, 15, 5, and then the 1 to find your precise entry. Always make sure you compare all your other influences. Did it tap into higher confluence? Did it tap into a fair value gap, order block? Are we in a market maker buy model, market maker sell model? Are we in a market maker buy model on the 5 minute? Does that align on the 1 minute? Does that align on the 15? When all the time frames align all together, that is when you find your A+ high win rate setup. And their high win rate because they don't occur that often, okay? This is why you don't need to be trading every single day. And if you don't know your bias, do not enter a trade, okay? If you don't know your bias, do not enter a trade, because when you go against bias, you are going to get bucked, all right? And no one wants to get fucking, all right? Yeah, okay. That was a quick video. That's all I got for bias. Probably see you in the next video. I just got an idea that popped up in my head.